So in this video, we're going to be talking about my thoughts on Terry Booth buying more stock. So just recently a piece of news came out that Terry Booth bought some more stock. He originally, around November 25th, I believe, it was filed on November 27th, he bought 270,000 shares at a price of $368. He probably did it because he wanted to show investors that he's still confident in his company, and just to like put his foot on the ground, saying that this is basically the bottom and it's probably not going to go down any further. And then the stock price kind of traded sideways for a while, but insiders started selling. And on top of that, Cam Batley left the company, and then this insider basically sold 1 million shares at $3.10, and then after that, the stock kept selling off and selling off and selling off, and now we're at a point where I think is a pretty attractive price point. It could go lower, it could go higher. I don't know at the end of the day, but I think that at these prices, it's an attractive price point. Of course, I want it to go down lower, but if I gamble, that's why I don't put all my money in, and I slowly scale in, because I still really believe in this company, and the return on investment is probably one of the best in the market. Sure, there's a lot of risk with Aurora, but I've done my research, and I am confident in Aurora. I am confident that Aurora will be, in the future will be a leader, and I think that this prices down here is an opportunity. So these guys sold because basically Cam Batley left, and they knew that there was going to be a collapse in stock price, and then Terry Booth recently on January 2nd and 3rd, he bought a total of 72,000 shares. 74,000 shares, around a price of around $2.70 average. Is it the bottom? No, but I don't think Terry Booth really cares about getting the bottom, because he knows that his company should be worth a lot more, especially if they can show investors that they become profitable. And think about the date that he sold it at. He bought it at. He bought it on January 2nd and January 3rd. He's probably looking at his finances, and he's probably saying, "Hey, look, Aurora is doing very well." And then he decided, think about it. If you guys did your research, you guys would know that the edible market is doing very well. The West Edmonton Mall location for Aurora is doing very well. Aurora is probably going to do pretty decently this earnings, and they're probably going to guide for a really good next quarter. That is my assumption. But I think when Aurora announced earnings report, they're not going to be profitable, but their revenue is going to be pretty decent. I think, that's what I truly believe. I will go into another video next week, maybe, on their earnings and, their earnings report. But what I think of their earnings report in the coming months, I think the earnings is probably somewhere in mid-February, but not 100% positive. I'm still bearish on Canopy's earnings, but I think Aurora can pull some pretty decent numbers this earnings report. That is my opinion only, though. The two executives leaving basically caused the sell-off to go all the way down to 268. And Of course I want Aurora to go low. I want Aurora to go down to $2 Canadian. I want Aurora to go down to $1 Canadian. But I don't think that's going to happen. At $1 Canadian, it's undervaluing the company way too much, in my opinion. And I don't think Aurora is going to go bankrupt. These short sellers are full of crap. They're not going to go bankrupt. They have money. They just raised a bunch of money, and they secretly raised some more money, and the edibles are selling very well. I think Aurora will be flipping a profit in the near future here, and investor sentiment will change from a negative to a positive, I think, in the springtime. But we'll see if that scenario comes true. Maybe even sometime in February instead of in spring, sometime in February, Aurora stock could skyrocket. Who knows? We'll see what happens. Aurora stock is up 2 cents after hours. So wait, no. Okay, so Aurora to me serves as a really high return on investment because it's trading at $2 US. If Aurora manages to go back to this 52-week high of $10.69, which is a possibility because it's gone up there before, when Aurora was already pretty diluted with almost 1 billion shares. Of course, Aurora is more diluted right now, but it doesn't mean that Aurora cannot go back to $10 if the scenario happens and Aurora goes back to $10 US. Aurora will basically 400% your money. 400% your money is something that is extremely hard to get in the market. And if Aurora and Nelson Peltz pulls through, there's a possibility that Aurora could go beyond $10 US, and we could see possibly even $20 US or $30 US in the next 5 years from Aurora, because Nelson Peltz cannot exercise his options unless the stock price goes all the way up to 30 to 40 Canadian dollars. So the return on investment is ridiculous if Nelson Peltz is actually working on a strategy, and I'm treating this price point down here an opportunity of a lifetime, unless Aurora is completely lying about Nelson Peltz and there is no US strategy and it's all bull. But I don't think it's bull. Aurora has delivered on everything that they called out for. They said that they will be the most ready for edibles, and it was true. They're the very first company that launched edibles, and they've been launching it on a consistent basis. And they've been selling out too. So, if we look, Aurora just launched this vape disposable pen, and it's already limited quantities. They sold out their pink Kush vape pen from San Rafael, and their Whistler Medical Shatter has completely sold out. So Aurora is doing very well with the edible market at the moment. So people be like, why invest into Aurora? Why don't you invest into Aphria? Because Aphria's return on investment is not that great. Aphria, if they manage to go back to $15 US, you will only make about 300% your money, while Aurora serves at least 100% your money. Aphria is a safer investment. I do like Broken Coast, but I think Aurora is a more attractive company than Aphria. That is my opinion. Kronos Group. Why do I invest into Kronos Group? Because the return on investment on Kronos Group is not that great. Kronos Group could go back to $21. That would be about a 300% return on investment, versus Aurora giving you a 400% return on investment. That's an extra 100%. Canopy, same scenario. If Canopy went back to $50, Canopy would about 250% your return on your investment, versus Aurora which gives you a 400% return on investment. Acreage Holdings, same scenario for Acreage Holdings. Acreage Holdings could Acreage Holdings is actually a very attractive stock for me because the return on investment is ridiculous. If the stock was to go back to around $24, all-time high, when the United States become legal, you will get about 400% return on investment, the same as Aurora. So I do have investments in Acreage. I do think Acreage is a safe investment, and I believe that when the United States become legal, Acreage Holdings will be worth a lot more money than what it is right now. That is my opinion. And Aurora and Terry Booth probably, I've been keeping you guys updated. Aurora West Edmonton Mall location is selling very, very well. Their Christmas holiday was very good. Aurora probably cleared out a lot of inventory through the West Edmonton Mall location in the month of December, because December is the busy holiday month and people like to spend money those months. So my assumption is the West Edmonton Mall location did extremely well, and in January they are going to be selling the edible products, which will continue the trend of high sales. I think a lot of people are going to go back into the store for the edible products when it comes out in January, but we'll see if that actually happens. Okay, another thing I wanted to point out is this is the most recent weekly update for Florida, and as you can see, if it wasn't for flour, True Eve wouldn't double their revenue. True Eve basically doubled their revenue, almost doubled, maybe not double their revenue, maybe like another 50% their revenue from the ability to sell dry flour. In Canada, we only had the ability to sell dry flour. Now we have the ability to sell vapes. We have the ability to sell edible products. I think, see how this medical marijuana MGSTC, I think, this will be increased big time in Canada, and I believe that Aurora could potentially double their revenue and go into profitability in the near term here. In the near term, I say by springtime, Aurora will be profitable, and the negative sentiment on Aurora will be gone, and everybody will be bullish on Aurora again. Similar to Afria. Remember how Afria had the negative sentiment where, Afria is gonna go bankrupt, or Afria is gonna, Afria, who wants to invest into Afria? They're shady as hell. And then what happened? They came up with a profit. And then what happened? All the bears decide to be bulls, and people are more bullish on Afria. So, so that's, my consensus. And also, I believe that Afria acts as a safe haven for Aurora, because I don't think Afria should ever be worth more than Aurora. Kron makes sense because Kron has billions of dollars on the balance sheet, and the market values money, cash, more than they value Aurora's total assets at the moment, because investors are bearish on Canada as a whole right now. So yeah, anyways, thanks for watching, guys. I hope you enjoyed this content. Give me a thumbs up, it helps my channel grow. Subscribe for future updates, and have a great day. Bye.